Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES tested the 95.75 to 97.75 resistance zone, where responsive sellers were active and pushed ES back down to yesterday's high, where we're getting a little bit of buying. So heading into the open, 88 to 89 quarter is the pre-market support. Now this is the most aggressive area where buyers can step in and is really more of a reference to understand just how strong or weak the market is. On the larger time frames, right now we are simply range bound, but short term, the buyers can maintain control above the 79.5 to 82.5 initial support zone. The primary catalyst on the day time frame is the FOMC announcement at 1 p.m. Central Time, and then we have the Fed Chair press conference at 1:30 p.m. Central Time, and both of those are catalysts for movement in the market, and we can get some directional movement and volatility off of that. Now, typically heading into the FOMC announcement, the market will remain range bound, and usually it'll simply balance within a relatively narrow range. And then once the FOMC announcement comes out, then we can get some directional movement and expansion in volatility. But until then, it's a pretty choppy and two-sided market. So on the upside, that 95.75 to 97.75 area is the first inflection point. It has already been tested in the overnight session, but sellers can still be active there off the open. Beyond that, we have initial resistance at 2101 to 2102, which also marks the open gap and naked VPOC. And again, that's a spot where sellers can be active, especially ahead of the FOMC announcement, since usually we do get that two-sided choppy type environment. And finally, 0475 to 0675 is a key swing high. That's essentially the previous swing high before the market sold off down towards 62.63. So on the larger time frames, that is a key inflection point. And again, in the event that we get there ahead of FOMC, which seems unlikely, but if we do, then sellers can certainly defend that zone on first test. And even after the FOMC announcement, that area can be defended on first test by sellers, but just getting up there would tell us that the market is quite bullish. And looking at the other markets, Russell has been leading on the upside, and if we're seeing a lot of continued strength in the Russell, then we'll want to keep our focus on long setups and avoid shorting the market even at some of the key resistance areas above. On the downside, below 88 to 89 quarter, we have a key high volume node at 85 quarter to 85.75, and then short-term key support at 79.5 to 82.5. The expectation is for buyers to defend the 79.5 to 82.5 area on first test, and again, especially ahead of the FOMC announcement. Now, after FOMC, we can get an expansion volatility, we can get directional movement, so then we have to be more cautious on either side. And a lot of times right after FOMC, you can even get just volatile movement within a two-sided range. So it's a bit chaotic and not the easiest thing to trade, especially if we're doing it on expanded volume. But the way that the market is set up right now, as long as we're holding above 79.5 to 82.5, the buy side can maintain control, and we can actually head higher from here. But if we break below 79.5 to 82.5, it doesn't necessarily mean that we're now in a very bearish market, but it does invalidate the breakout that we saw yesterday afternoon, and that would be a signal of weakness. And from there we can go down and test 74.76. That's still a spot where buyers can be active, but we'll have to be more careful at that point, simply because we would have failed yesterday's breakout by then, and from there the market could even go down to 72 and even lower. So even though buyers can be active at 74, 76, and 72, it calls for caution, and we'll have to gauge the market in real time to see just how weak the market is heading into 74, 76. And if it's happening right off of FOMC and there's huge momentum on the downside, then it's probably better to be more careful and more conservative on fading it. But if the momentum's not really there, and overall the markets are holding up quite well, and Nasdaq and Russell's holding up, then 74, 76 could still be a spot where buyers enter the market and defend that area. The key thing off of 74.76 is going to be to see if ES can quickly get back above 79.5 to 82.5. So, that initial support zone is also the area we are viewing as the bull bear zone to establish our short-term directional bias. So, if, the market continues to hold below 79.5 to 82.5 later in the day in the event of a downside move, then, that would be a bearish signal and the market could go lower from that point on. So really the key areas we're looking at right now on the downside, 79.5 to 82.5, and on the upside, 2101 to 02 and 0475 to 0675. Again, the other markets are pretty bullish, especially the Russell. Nasdaq is pretty much in line with the S&P, but TF has been showing a decent amount of strength lately and leading the other markets higher. So that's a market to keep an eye on to make sure that we're not seeing any major weakness in the Russell and that we're not seeing any key reversal taking place in the Russell. And as long as the market structure remains intact in TF and ES holds above 79.5 to 82.5, the buy side can maintain control and we can simply balance at higher prices or just make a move into those higher zones at 0102 and 0475, 0675. So those are the main thoughts heading into the open. Again, ahead of FOMC, typically very choppy, very balanced. So, be careful there. Be very mindful of trade location. And then after FOMC, we can expect a expansion in volatility. So those are our main ideas. Let's see if the buy side can maintain control today, and we'll take it from there.